Welcome to the Trading Lounge and the day ahead report. And here, just before we start, I've had to redo my chart, so I don't have them labelled. I'll fix that up later this afternoon. But anyway, we'll press forward. And the S&P 500 here, we were looking at, this is a 4-hour chart here. We were looking at this structure down here being in 5 waves, so we naturally thought that we'd be looking for an A, B, C here, and then another little 5 waves down through here, and then we move up through here. But I've made an error, and I just want to point out that error. It was a little bit of a tricky one, really, and it was a little bit difficult to see, very difficult to see in the Dow Jones, because the Dow Jones had a longer move up through here. But the way that this should be read would be up for 1 here and A here. This is the B wave through to here, and this is actually the C wave through to here. It's a little bit difficult to even sort of take on here as well. But when you have a look at this on the Nasdaq, you'll see that the ABC correction is a 4-hour chart as well. And this is the same here, the 5th of the 12th, 6th of the 12th here. So you can see that it's really quite simple here in terms of the A wave, the A, the B, and the C wave up here for the B wave, and then down for the C wave, and then up through here. So this low here, if I come back to the other chart for a moment, that would be that low just here. So you can see how they're sort of slightly warped a little bit, and yeah, it was just sort of headline driven to a certain point, as it is at the moment as well. The talks for the for rearranging the structure of the debt or dealing with it in one way or another seems to be coming across nicely. So we're seeing that move to the upside. So we are seeing like an impulse wave here to the upside. Impulse wave is 5 waves. This is the S&P 500 here again. So we can see here that we've got this wave 1 here, this wave 2, which we originally thought was a little A, B, C coming into this area and moving down from that point, but up for 1 and back for 2. This is still, I believe this is all just the 3rd wave through here in terms of up for 1, back for 2, up for 3, back for 4, and up for 5. So that would be the 3rd wave. The 4th wave normally pulls back to the 4th wave of 1 lesser degree. So we should see it come off, maybe not that far. It might just gravitate towards this important number here, the 144, where Gann and Elliott meet on in their series of numbers, and then we'll see another move to the upside through here as such. So yeah, that's pretty much it. And the same with the Dow Jones as well, the same impulse wave to the upside. One of the important things here, though, in the bigger picture is that the 13,300 is a top of minor group 1. So it's quite natural for this to, the first high above the level, to fold back and retest support. Technically, it can come back to the 4th wave of 1 lesser degree or the 38.2 retracement level of wave 3 here. So if we bring that into here, it would be further down into the 13,272 there, area there. But look, basically a retest back into this area through here. However, for day traders, if we're wrong, then you'd need to work the midpoint from here. So just looking at that on a smaller scale through here. Support across the midpoint here, we've got the little overshoot pattern, so it's moving back down. But if it vibrates across this level through here and develop support on that, then move in from that point there. The European markets are to the upside as well, and I should have realised this too. With the we were following these to the upside here in terms of the A's, the B's, and the C's. So whilst talking about it here, I must have been looking at the Christmas holidays or something. But the FTSE and the Nasdaq and the Australian ASX 200 were doing pretty much the same sort of thing in their own way, having a 3-wave pattern across a large number, and as we mentioned here, looking for support through group 1 here, and on top of group 1 is still the case. You'll expect some resistance for the DAX here at subgroup 2 here. Yeah, the same with the FTSE, same with the Australian as well here. We were looking at two supports here. First of all, group 2 here, 65.72 on the 80, and we're talking about through the service the A, the B, and the C here. Moving up from that point. If it did slip down in line with the US markets for the C wave, then we would have looked at it at the 45.50 here and looked to buy it at this stage here. But look, anyway, that's pushing to the upside there. And the important thing here too, and this will still be moving with the Dow Jones and the S&P 500, so we will see it sort of soften somewhat. But once again, if support is found on the top of subgroup 1, 10, 20, and 30, on top of 30 here, then we can move. You can move, stay in that, and move up further to the upside there. So that's probably the best way to handle that situation. I'm just seeing here. This is in terms of the classic trading levels pattern too. The classic trading levels pattern is the arrival to a number, the reaction, the support, and then the first high above the level. So we're really looking for the first high above the level through here. There's a couple of ways to count this through here. We just need to be a little bit careful through here. So in counting this up through here, it seems to be wanting to go further to the upside. However, that support on the 46.30 would be important. So looking at the structure just from this point here, we can see that there's 5 little waves in through here. Okay, so then we see a little pullback through here. So one way or another, this must be a little wave 1 up to here and a wave 2 here. So we must be seeing a little wave 3 here. So we'll see a wave 4 and a wave 5 up into this little area here, and it could fold over from that point. The structure from here, I can see that we've got a little 1, 2, 3, 4, 5 to here. But that 5 could also probably be included to here as well. But I was thinking this as being wave 1 and 2 here, then this being the 1, the 2, the 3, the 4, and still doesn't count right either, does it? Look, it's basically still unfolding to the upside, but I also know too that pushing to the upside, it will run out of steam and then come to the downside. So look, either way, it does appear that it can go further, but look for some sort of consolidation point to work off, either the 46.20 or looking for support above here. All right, let's have a look at the commodities. Okay, starting with copper here, and if we consider the current move up on the indices from their last low, up in looking at 5 waves to the upside, but currently they're in the top of the 3rd wave to the upside, so we can kind of expect them to have a 4th wave to the downside before we see another push to the upside. And if that's the case, then we're going to be seeing the base metals a little bit weaker as well. And as you can see here, we're in group 2 here, we're in 365 here. As I mentioned before, the 38.2 retracement level is down here at 362 area, and I think by looking at this little pattern through here, this can come further to the downside here. So that's going to bring the base metals to the downside, okay? So when I look at BHP here, for instance, this is US BHP, but there won't be a lot of difference. If we just sort of look at this little structure within here, what we can say in terms of its 5-wave structure is that the strongest part in the structure would be in this area here, wouldn't it? So essentially that's going to be the 3rd wave in through here. So this is basically up for 1 and back for 2 here, and there'll be 5 waves in this here, so it would read like 1, 2, 3, 4, and 5 to here, and then up for 1 and back for 2. So this is all the 3rd wave in here. So the 3rd wave would be the 1, the 2. This is the 3rd of the 3rd in the middle here, the 3rd, the 4th, and the 5th here. So in its own way too, that's close to the top of the 3rd wave as well. So if copper breaks down through the 365, then we can expect some sort of pullback into this area through here, the 76.50 or the 75. In fact, it would be the 38.2 retracement level from this point here. So we'd be looking somewhere in the 75, 50 sort of area through there. Once that's complete, then we'll see it move up to the 80 there, where it'll have a larger correction there, and that will be the same for many of the the resource sector. So just keep an eye on that. The thing that will keep it buoyant is that the US dollar has still got further to go to the downside, and we'll look at that shortly. The oil market is, we had a target up here. The 61.8 retracement level for oil was about where it is now, 88.36, I think. But I think that looking at this structure through here, this is also like the third wave in through here as well. So what we're looking at here is we're still seeing another push to the upside here. So expect a correction across the 88 here, and it may be equal to the downside through here. So the 87.72 will be, and the group 2 here will be supportive, but we can expect one more push to the upside before that see that have a larger correction to the downside, and that would also be in line with stock, because oil can move with stock. We're not seeing we're not seeing Brent. This is Brent here on the 8-hour chart here, but the reason I'm bringing this for here is that it's moved to the upside as well. It's not strong to the upside, so it's there's weakness in these moves to the upside. Also, talking about weakness as well, the gold market here has fallen out of bed. So the original count was correct. Well, we've had 5 waves down through to here, then the A, the B, and the C wave through to here as wave 2, and the wave 3 to the downside. So this is also sort of 5 waves down through here as well, in terms that you have a beginning, a middle, and an ending of a structure. And this middle here is obviously the third wave through here. So there'll be a bit more in here, and there'll be some sort of rally, retest back into this area through here, and then further to the downside into the 1650. But we can expect it to become lower than that as well, because this is wave 1 here, so wave 3 here will be longer than wave 1 here, and then this is wave 2 here, so we'll see wave 3, wave 4, and wave 5. So still further to the downside here as well on that in that structure. So let's have a look at Forex. Okay, the US dollar through here, we're still extending down into the 5th wave through to here, and the euro still moving to the upside through there. So we're looking for from this little point here, we're in the 5th wave down through to here, and in this little structure here, from this point here, we've got a little 3rd wave here. And from here we've got wave 1, wave 2. So we're looking for wave 3, wave 4, and wave 5 down through to here. You know there's going to be a bounce off group 1 here. So group 1 would be 79, 10, 20, and 30. And it's getting its bounce now off 30. So it normally checks back into 40 and then starts working lower through that area here. The euro doing the opposite as well. So the euro here, we were looking at this correction through here yesterday, and obviously it's pushed up higher based on headline news. So we're looking at this here as a triangle pattern through here, and we're also looking at this here as wave 1 and wave 2, and you can see a strong wave 3 functioning through there. So that's that would be pretty much the top of that one there. So we can expect a wave 4 to pull back 38.2%, but within reason in terms of the levels there. So we can expect that probably to pull back into that area there somewhere before we see another push to the upside there. So in terms of trading, then you're just really looking for the wave 5 should be the same length as wave 1 here, because the extension's in wave 3 here. So look, same old story really, looking for support on top of subgroup 1 here, on top of 130, 132.30 there for a move to the upside there. The Australian dollar as well, over here. the Australian dollar as well, is also in a bit of a triangle pattern here as well, a possible triangle pattern. And it's a possible triangle pattern because we've got all these structures here are in 3 waves, and that's what triangles are. So the D wave will be in 3 and the E wave will be in 4. Sometimes the E wave takes out the bottom of the triangle down through here. But look, in a bit of a nutshell, we're really looking, as you know, we're looking for, well, 105 to be supported, tested and supported, and then moving to the upside through there. If there's support found on 105.50 through here, the midpoint through here, then you'll need to then you'll really want to sort of move in long at that stage through there. But otherwise, you should be able to pick it up back through here somewhere, and we will have charts out on that following this particular triangle pattern through here. So a nice move down through here, and then building up through subgroup 1 here, the 10, 20, and 30 is what you'd be looking for on that side. Alrighty. I think that's just about it, really. So yeah, sort of positive. Today's Wednesday, so just bear in mind that you know, the S&P 500. If I can bring up this chart through here, you know, we're looking at a top of a little third wave in here at the say 1450 area through here. And then we're looking for a pullback. So that pullback is likely to occur tomorrow. So be careful about you know, over trading on the long side today. So keep those profit targets a bit closer, and take more profit at numbers as well. So up today, down tomorrow, and up on Friday, something like that. Alrighty. Good morning and good luck.